This is Paul Singh, the market speculator, with the free weekly swing trade report with bullsonwallstreet.com. Let's take a look at SPY here. Yesterday, we talked about this key level here at the 9 that we were just under, and we were looking for some kind of resolution. Didn't really get it, kind of pulled back a little further, and we're still under the 9 moving averages here. Now, Friday's move, pretty good, only up 0.37%, but held the 50-day after looking like we might break down. And going into this week now, we've got 2 key levels to watch. That's going to be the 9. If we can get above the 9, we can start to get a little more aggressive here. Now, it was a huge volume on Friday, but at least we beat Thursday's volume and kind of got up to Wednesday's, but we need to see a pickup in volume as well. You can see throughout this run here, we've had a little more green to red in terms of this up move, more positive than negative days, and we want to get back to that. A little bit of a change in character here, which sometimes can happen during sell-offs as long as you can recover here. But we'd like to see a pickup there. We're going to watch that very closely. Now, if we break the 200-day, that's going to be a negative. We can actually think about starting to get more aggressively short, and we've got the open gap there at 186 that might come into play. So key levels here, the 200-day, the 50, and the 9. We're not going to get really bullish until we get above the 9. And because of that, I'm currently only in 3 positions. They're all commodities, whereas before I've been in 10 to 12 positions. And part of that is because of the current market here. Now, what are we in right now? We're in X, which is holding up right around the 9. Just got into FCX, which put in a candle very similar to the market on Friday. So we're going to take a little stab here. If it doesn't work out, that's okay. If we do end up getting above the 9 here and the market, we can start building some more positions. But very similar to the market, FCX, if it can get above the 9, we could see a nice run to 14 there. And I am also in oil, which is putting in a pattern very similar to X here. So not heavily trading at this point until we see some resolution. Let's quickly revisit the FANG stocks. They've diverged from what they were doing in 2015. For early part of 2016, they were looking pretty bad. And Netflix and Google still are. We can see Netflix here had a poor earnings breakdown and is way off its highs. Nothing to do with that one. And same goes for Google, putting in a very similar pattern, way off its highs. But there are 2 that are looking really good, and that's Amazon here. These ones had earnings breakouts and are actually near the highs. So they're not moving in concert anymore, kind of diverging here. Amazon broke out, is holding its 9. We got a nice bounce on Friday and could be making a run to the all-time highs. I'm probably not going to do anything with it unless it can break that all-time high around 700, but we're getting there. And you could take maybe an early stab here and then add to it as you get to 700. And Facebook, a very similar pattern here, broke out. Now this one is actually, excuse me, at the all-time highs, held the 9, bounced. I would play a break of 120, and maybe we see a move to 125 or 130. That's the weekly report here. Now, if you want more, you can go to bullsonwallstreet.com and sign up for the daily swing report, where you'll get a daily video, my trade alerts, you'll have my focus list, and there's a great annual plan here at $5.99 a year, whereas if you do it monthly, that would be about $1,200 a year. So give that a try if you want more. Otherwise, I'll see you next week with the weekly report.